Thanks everyone for coming back to our next edition of Econ Talks. Gareth, we've had the latest quarterly survey of business opinion coming out today. What's the feeling there from businesses moving ahead?
Yeah, looking through the indicators, most of them have moved back towards normal, not right back at normal levels, but they have improved substantially from the June quarter results, where excuse me, obviously things were affected by the lockdown and business confidence was really dire at that stage because nobody knew quite what was going to be coming through and happening. The way the economy has bounced back, I think, in terms of some of the spending indicators that we've seen, job numbers have obviously not deteriorated as much as expectations might have suggested 3 to 6 months ago either. And that's all being reflected in terms of a jump up in business confidence. And what was particularly interesting for me as well was that while business confidence is still well below average levels, if we look at how firms have experienced their own trading activity, that has improved substantially and is almost back to what will be normal levels at this stage.
Wow, so quite a strong bounce back coming through there with, I guess, like you say, that view that although we've had a hard hit, we are seemingly improving and getting better. But I mean, look, the effect of this isn't going to be playing out uniformly across all sectors. There is quite a difference, I'd expect, coming through in the numbers as to who's not feeling quite as firm and strong moving ahead.
Yeah, I mean, construction was one of the areas. Well, I think it was the most negative of the sectors in the previous quarter, but up to the most positive now, and that reflects obviously the strength of the housing market and ongoing construction activity, particularly in the residential sector, and then of course promises around infrastructure projects coming through from the government as well. On the less positive side, services still struggling, and that does reflect the nature of the hit which tourism has been taking, and also merchants. So a lot of interesting indicators coming through in terms of that retail sector, particularly just around possibly some cost pressures and pricing pressures, which may reflect the fact that the Reserve Bank has been stimulating the economy like mad as much as it can, but also supply chain issues showing through, and so stock levels in some cases at low levels. And also, rather than demand being an issue for many of those merchants in terms of constraining their growth, it is actually getting supply into the shops for some of that stuff. So it does suggest that those issues which have been lingering since the start of the year with the lockdown in China are still affecting some businesses out there.
Yeah, and we have heard, some anecdotal reports at least around, some shops that might not have the latest goods or a bit of a back order in place. If you want to do your Christmas shopping early, that sounds like it would be wise to make sure you actually, get some stuff ahead of time. And we have seen that reflected in some of the import numbers as well, although a lot of that is down to a lack of business investment. It does all play into highlighting that there's just not necessarily the same amount of supply going around as otherwise. The other area is, of course, the labour market. We know that businesses are feeling more upbeat. How's that translating through into what the expectations are for jobs or not moving into the next year?
Yeah, so employment intentions are quite a bit stronger than they have been previously, and also businesses reporting that labour has become more difficult to find again. There was a substantial easing, funnily enough, in the June quarter, but skilled labour in particular, again, it's not back at pre-lockdown levels or pre-COVID levels in terms of how hard it is, but it has become more difficult. And the NZIR did note or suggest that that may be a function of the closed borders and so not able to access workers from offshore, making it more difficult for those firms. Getting hold of unskilled labour, that's become a bit more difficult as well, though obviously not as tough in that space as it is getting hold of skilled labour. So yeah, right across the board, when you look at those labour market indicators, there was a definite tightening from what had been a very poor result, obviously, in the June quarter, consistent with the fact, to some extent, that we haven't seen as many job losses as we might have expected. And we've talked previously about just what the next few months might mean in terms of tourism and retail and other businesses as well around employment. So it will be interesting just to see how that pans out in terms of those numbers. At the moment, we're picking a U-shaped recession, so a renewed downturn through the first part of next year, but that is pretty contingent on that labour market worsening from here.
And I guess those labour market changes are going to be quite interesting to see how they play out. We saw down in the likes of the lower South Island that held a bit of a jobs fair in the last week that they actually didn't get too many people coming out. And it does make you wonder how many people are sort of just sitting without a job and going, look, I'll wait for things to improve. But also possibly people who are not quite so keen to get into very short-term work if there's still going to be, that I guess it might be easier for them to sit on and benefit for a slightly more extended time rather than sort of dipping out or moving across. But the other point you've just highlighted, Gareth, which I think is quite important for us to keep in mind, is that sort of skilled migrant element. Because although we have a lot of Kiwis out of work, they're not necessarily the people with the right skills to fill these roles. And without people coming in and without the ability to just click your fingers and have Kiwis move into those roles, it takes a bit of time for you to upskill. You do sort of have a year or two where you may well continue to suffer from some of those skill shortages. Now, there's an element there where you might not be able to get Kiwi straight back into work, but over time, there is certainly the ability to build that talent pipeline a bit more.
Yeah, that's right. It does take time for that training to occur. I mean, one of the interesting things as well, Grant Robertson said a couple of weeks ago that if we could arrange a full-on travel bubble with Australia, that would actually free up a lot of capacity through the managed isolation and quarantine facilities and provide scope to start targeting areas of where the skill shortages are particularly acute to bring in workers. I mean, it still would be nowhere near the sort of free and open borders that we had previously in that regard, but does start to provide more capacity there to try and meet some of those most critical shortages if they become more problematic from here.
Absolutely. Look, fascinating. Always interesting to try and understand what businesses are thinking and where they may well be switching their focus on to next. We'll continue to monitor that one like we do everything else. And I'll catch you and everyone else back on the next edition of Econ Talks.